Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Now are a couple of more interesting stocks that you're going to hear about, courtesy of our strategists Nina Mishra and Brian Boland, who joined me here. Brian's joining us remotely. So Brian, we'll start with you. Give us the bottom line on Bottom Line Technologies.
Oh, excellent intro, Terry, for Bottom Line Technologies. The ticker is EPAY, E-P-A-Y. It is a Zacks rank number 2, and that makes it a buy. And it has that wonderful divergence that I love to see in the style score. So that is an F in value and an A in growth. And I am a growth investor by trade. So I like to see it when the growth score is solid and the value score is low. That tells me that I'm already on the right path. The stock is going to report earnings again in early November, and not really much of an earnings ESP here, so a little bit, you got plenty of time to decide, and things could improve for the situation down the road. But let's take a look at why the stock is a Zacks rank number 1, and we can see that for the most part here, earnings estimates are trickling higher. I mean, this quarter is not necessarily going the right way. We got a little edge down here, so we got I should do a downward arrow. 33 cents down to 34. Next quarter remaining solid at 35 cents. But we can see that the year number has been moving higher here. Obviously a little tick lower right there thanks to this move for this quarter. But next year, the number moving from $1.58 to $1.70 over the last 90 days. That is what you like to see. Now, I will draw your attention to the idea of this company beating the number. And we can see here there has been a consistent beat of about 20%. There's a 20% beat in each of the last 4 quarters. 19.98% is your approximate average there, as the one quarter came in just a little bit below there. So very steady stock on that. And then let's take a look at what that does for you when you have a stable business that sees upward estimates, continuously beats the number by a fairly predictable rate. Well, boy, oh boy, at some point people are going to say that kind of safety looks good. And I'd say this is the point at which the safety started to look really good for everybody, is right here about the reporting for the second quarter of 2017. Ever since then, it's been up and away for this stock. And this is kind of a blown up version of the price chart here. So the last several years, but if we condense this down just to the last year and a half or so, 2 years, you would see it as almost like a 45-degree angle like that, with a couple of times where there was dips, and those were all a buying opportunity. So right here I'd call that the dip. Right about there I'd call that a dip. Even right here I'd call this a dip. And then lo and behold, right here we kind of have a dip. I know it's kind of hard to see on that chart there, but the end idea is the stock sold off a little bit yesterday, and today, Terry, what is today?
Today's Tuesday, Brian.
Tuesday,
September the 18th.
18th, right. Okay,
right.
So just want to make sure everyone's aware. So a nice rebound here today, and this tells me when you see a big rebound for a stock that has been moving steadily higher over the last long while, that any sort of dip is a buyable opportunity, and you're seeing that in the stock and ePay today.
Okay, well, thanks for that. I'll ask you right now so I don't have to bother you anymore. Do you own it?
I do not own this stock.
Okay. So, Nina, you have an apparel stock here that's worth looking at. It's doing pretty well.
Yes, so we know that consumer stocks have been doing pretty well of late. Mm-hmm. And in fact, consumer discretionary is the best performing sector year to date, and that is because of the booming economy and the tightening labor markets and rising stock market and tax cuts also, which increase your disposable income. Luxury retail has been hot in particular because, upscale consumers and even middle class millennials, they are now willing to spend much more on higher end branded items as their disposable incomes go up. And Michael Kors, as you know, it's a global luxury fashion house. They produce apparel and accessories like handbags and shoes. Last year, they had acquired luxury shoemaker Jimmy Choo, and during the reported quarter, both Michael Kors and Jimmy Choo brands did pretty well. Results were much better than expected. They beat on both the top and bottom lines and also raised their guidance for the year. Now, if you look at detailed estimates page, you can see the big beat over here, more than 40%. Their earnings increased 65% year over year, and revenues also increased 26% year over year. So results were really good. And in fact, if you look at the longer trend, they have been beating consistently, and their average positive surprise for the past 4 quarters is almost 36%. And of course, analysts like the results, and you can see that estimates have been going up since they reported their results. Looking at the longer term picture, you can see from the price consensus and EPS surprise chart that they have never missed, all green arrows. And the stock is currently trading at a reasonable valuation of 14.6 times forward earnings, even though it has gone up a lot in the past couple of months or so, and it is a Zacks rank #1 strong buy stock as of now, and the industry rank is in the top 12%, which also indicates that this uptrend could continue for the stock.
So all in all, a good picture for
Yes, it does look good.
Michael Kors. Do you own that?
I do not.
Okay, you don't own Brian's stock either?
No.
Okay, just wanted to be sure. Thank you both for all the information. Thank you. And one more thing that I don't want you to forget about is that there's a lot more stock information on our website, Zacks.com. Get over to the homepage to start checking it out. Up there 24/7 for your consideration. With Nina and Brian, I'm Terry Ruffalo.